The broadcast is now starting. All attendees are in listen-only mode.
Hi everyone, welcome to the AbleSys webinar. Ron here. We'll go over the charts and the signals from recently, from this afternoon. We'll take a look, and I think you'll like what you see here, and I'll be glad to help anytime also. You can always call or email me anytime. You know that by now. So let's jump in and take a look. I want to take a look here at the, basically the stock market, the S&P. Found this kind of interesting after the big move in June and July where we had the buy signal and it went up very nicely. That worked out very well. Interesting how the software, again, just following the simple rules that we go by, nothing special, would have stopped us out right here. Previous lower blue dot would be right there. It would have been out of the market pretty much the whole month. And, we know this has been a bouncy month, or it sure has been rocky. Not necessarily all one way, because it's, down, up, down, up, down, up. Depending on the, political stuff and everything else going on, it's been pretty wild. It's been fantastic for the intraday. Volatility has been great. So the intraday trading and intraday AbleTrend signals have been very profitable and extremely good this month. But the end of the day has been, really choppy, as you can see. So, I got to point that out and be fair about that. But here's the interesting part. Look how every time the price, the S&P, has big up day, Dow's up, 300, 400, 500, S&P's up 30, 40, 50 points. Look where it stops. About 5 times now, right? Pretty much almost exactly, certainly right in the same area of AbleTrend's hidden resistance points, which are these dots, the daily dots. That is just really cool, and that's valuable information to have. We know that. What does that tell us? It tells us we're not buying because there's a very strong wall of resistance above the price right now. And it's hit it 4 or 5 times and stopped, right about within a few cents of that area. In fact, today it went right to the penny, right to exactly to the red dot and stopped, and then backed off a little bit. That's why we had a little bit of a pullback the last hour or two. Because AbleTrend knew that there was resistance there and it's going to have a hard time. Now, it doesn't mean it can't break through. It just means there's, kind of like a roadblock there. So, it's going to be real difficult. And we started that dot 2 weeks ago before that even happened. 2 weeks before this, any of the prices hit this point, we had the dot right there, as you could see. So, and it's obviously the same, exact same price all the way through. Red dots can only go down. Blue dots can only go up. Remember that. Same thing with the X's, dots, same thing. Red dots can only go down, or they can stay the same. They don't ever go the opposite way. Blue dots only go up or stay the same. They never go back down. So if it breaks the blue dot or breaks a red dot, it's an important point in the market. But, that's some really valuable information that AbleTrend's given everybody who's got the software and curious to know what's going on in the market, because this is the perfect example. This is SPY, the stock market basically, as well as S&P, and it's keep hitting that point and stopping. So it'll be interesting to see tomorrow if it breaks above it or next week. Very interesting to see. Cool stuff. I love all that stuff. Okay, well, let's jump in. Let's take a look at our favorite market to trade. Not that it matters with AbleTrend, because AbleTrend signals work exactly the same. They are just as accurate for stocks as they are futures or Forex. Day trading, swing, position trading, works exactly the same for everything. And we use the same colors and dots, and we use the same rules. So that's the nice part. You don't have to learn different rules for different markets, or you don't need different systems or different indicators for different, time frames or market. No, it's all the same. It's real simple. And all we're doing is looking at the colors. So, anybody could, do that. Beautiful trade, and as I probably said thousands of times by now, probably tired of hearing it. First trade of the day, and last trade of the day, usually, not always, but those are usually the 2 best. So, those are 2 trades you never want to miss. Once again today, just as it was yesterday, first trade of the day, today and yesterday, big winners. Really nice going. Up and away it went. You had your 2 green bars right here. So we're in at 94. Here's your two greens. You know, we're up a good 10, 15 points at that point. So we're going to put that stop 1 point below the bottom of the lower of the two greens. We're stopped out here, right about 07, in at about 96. Just call it 10 points, about 12. Let's call it 10 points. Worked out real nice, a nice little, $200 start in 10 minutes per contract. You trade 5, 10, 50, whatever you trade, times that by 10 or by 5 or by 2, however many contracts you like to trade. And I always look for tick chart agreement, of course. Now on the sweet spot, which comes in right here, and it's the same for every market. Oh my God, the Russell was unbelievable yesterday. For anybody trading that, quite a few people did a lot of money, did very well with that. 44, nope, not yet. Nope, can't do it. 44 right here, there's a no trade zone on the tick chart. Not going to take it. 46, okay, so we can get in here on the next bar, 45, that's okay. We go long there, and it's basically about a break even anyhow. No trade zone. Moving right along. This was an impossible one to pick. I mean, it went down fast. There was actually no blue X there at that time, because it just zoomed down 100 miles an hour. But I mean, the software picked it up, but yet you got to be fair about it. That was just impossible. Obviously, no trade zone here. Look at all these no trade zones that kept us out of trouble. That's the beauty of the indicator. It keeps us out of trouble. That's why we get so many less losing trades. Now, there'll be some, I'll guarantee you that for sure. But you just have to follow the rules. You're not going to do better than the indicator. You, me, nobody else, and no free indicators, MACDs and moving average, no can even come close to the long-term performance. Not even close. Anybody could have a lucky day, but nobody can even come close to the long-term consistent performance of these algorithms. I mean, they're doing hundreds of calculations, and we got multiple time frames. You just have to stick with it. I mean, you might have a couple of losses in a row. It's going to happen. But you've got to stick with it. So we're going to go long there, and if you didn't get on that one, you can certainly get in on any one of these blue bars right here. We're in at about 7,700. And this worked out very nice again. Out over here at about 77.13. So 13 points is $260 that AbleTrend gave me, you, and everyone who follows the rules and takes the trades in 20 minutes, about 30 minutes. Obvious no trade zone. And pretty much everything's the same for me. That was a losing trade here, because we're going to go long right there. We're actually going to get stopped out right about there, because we put the stop 1 point below the bottom of the blue bar. But if it's a really short bar, we always give it 5 points minimum. Got to give it at least 5 points. So if you didn't get stopped out there, you did there either way. That was a losing trade of about 5 points. Same thing over here. This is about they're going to be, again, stop loss 1 point below, so we're going to lose a little bit on that trade too. Got to be fair about that. It's going to happen. But in fairness also, a lot of people don't trade during what we call the dead zone. That's optional. Some days it's actually good. But the dead zone is right here, about right in here, and that would have avoided a couple of small losing trades there. But I show it anyhow because I want to winners, losers, and some people did trade during the dead zone, and that wouldn't have worked out to that. But then again, it would here. There's a nice long trade there where we're stopped out right there. Actually, 2 green right there, so that worked. Well, it wasn't enough profit. But, pick up, maybe 5 points. Kind of helps out for one of the earlier trades that we lost on. This was a nice trade right in here. Triple confirmation. Any one of these red bars is triple confirmation sell. The odds are greatly stacked in our favor to go short. Anytime you can use a stop a little bit above these red dots or a little bit below the blue dots, stretch it a little further. In other words, let's say you go, well, it's 5 points away, maybe the top of the red bar. But if I go another point or two, I can go above the red dot. It's a big advantage. The red dot is a roadblock. It blocks the prices from going higher. So if we can get a roadblock of resistance or same thing, support on the way up, between the stop loss, which will be about here, and the price bars, that's going to give us a big advantage. Again, picture that in your mind. We got a nice big wall in between our stop loss and the price. It gives us extra protection. It lowers our risk. And AbleTrend is all about low risk trades only. So if you got to move your stop a couple of points further away, it's okay. You're actually better off. People say, oh, it's too far away. No, you're better off because you got a nice layer of protection. If you can put your stop loss a little bit above the red dot or a little below the blue dot, that's the extra protection. It's going to work out great. Okay, then we get our two greens right about, that's 10 points in that place. That's fine, but we don't get stopped out, so we put the stop. Now we can put the stop a little lower. There's two greens. We're stopped out on the next ball right in there. So we're out at about 09, shorted at about 17. So that worked out okay. Picked up about 8 points on that trade right there. We're going to go short right here. And that one would be a losing trade. Small loss, but it would be about 5 points. And that's the end of the day. It's right here. It's 4 o'clock New York close. Rick is saying, sent that double, not triple confirm at 220. Oh, isn't that double, not triple? Double's okay. I mean, you just don't want, well, let's just see. Let me just see. 220, 225? That would be 1425. Let me see. Oh, right in here, Rick? No, it's triple. You've got a red bar, you've got a red dot, and you've got a red X. Or any one of these, red bar, red dot, red X. So that'd be triple. You've got red bar, red dot, red X. So, yeah, any one of those would be fine. Yes, sir. And we just keep it simple and, repeatedly just use the same rules and same colors and dots. Just apply the same trading rules to every chart, and you will do well. There'll be losing trades, but there'll be a lot more winners, and they'll be a lot bigger than the losses. We pick up a lot of big trades. It's been a good week. Yesterday and today especially, very good. It's been an excellent month. If you were just like a robot, assuming it, the money, if you're trading money that you can't afford to lose, not supposed to be trading. There's definitely risk in trading. But you got to trade it like it's just robotic, like you're a robot. When you're seeing it, when you're watching it live, you see something like this come up, oop, I'm in. You just don't think about it. You just go by the rules, put your stop in place, almost like you're just yawning doing it. Just no big deal, same old thing. But good stuff. I think you'll find it real helpful. One last question from Andrew. Can you just place your stop at the X if you're willing to risk a little higher? Yeah, you can. Yeah, that's fine, Andrew. Yes, sir. Certainly can. Sometimes it's better to put it a little further away. It gives you a little more room to breathe. But then again, you don't want to have it too far away and have any big losses, because we never, ever have a big loss on any trade because we immediately put a stop loss in place. So, good stuff. Hope this is helpful for you. Well, I'm always glad to help anytime. Thanks, everyone, for being here. We'll see you back here next week.